The same week, court files link Jeffrey Epstein to some of the biggest names in tech and finance. Elon Musk quietly merges SpaceX with his AI company XAI. And Trump picks a new Fed chair who could rip up the old rulebook. All of that is connected. And if you own stocks, work in tech, or care about AI power, it directly hits you. Welcome back to the comment section with Thomas Paul. Today we're breaking down Epstein's money trail into Silicon Valley, the SaaS meltdown, the Moltbook panic, the SpaceX XAI mega merger, and Trump's new Fed pick. Then I'll show you what I think actually matters for your portfolio and your job. Here's where things get interesting. Let's start with the Epstein files. Newly unsealed documents show Epstein bragging about connections with big tech and finance players, dinners with major CEOs, and investments tied to high-growth names like Palantir and Coinbase. Here's the key. Epstein wasn't just a creep with a private island. He positioned himself as a capital connector between elite tech founders, hedge funds, and politicians. Why it matters for you. It's another reminder that the stories you're sold as pure innovation are often mixed with ugly money and influence behind the scenes. As a kid, I watched my parents lose most of their savings because they trusted the smiling expert at the bank. No scandal, no courtroom drama, just quiet damage that took years to fix. This is the same pattern at a bigger scale, but it's even getting worse because while these files make everyone pretend to be shocked, public markets are having their own reckoning. SaaS stocks, the old darlings of tech, have been smashed. High growth, high multiple software, pay us forever business models. Investors finally looked at the combo of slower growth, higher churn, and real interest rates, and hit the eject button. The market is asking, are we really going to pay 20, 25, 30 times revenue for a company that grows 10% and loses money? That's not disruption. That's math. When I worked at a local newspaper in college, I saw how one economic story could have two totally different headlines. Tech still growing, and investors flee risk assets. Same numbers, different spin. What you're seeing now with "Is SaaS dead?" is mostly the spin finally catching up to the numbers. And here's where things take a step further. Because while old software gets repriced, a new AI panic is forming around tools like Moltbook. If you haven't seen it, Moltbook is basically a supercharged notebook environment that can run large language models, analyze data, and build agents. Why are people freaking out? On one side, AI researchers and builders are excited. Finally, a serious toolkit. On the other side, people are warning about model leaks, data exfiltration, and autonomous agents doing, let's say, things their creators did not have on the roadmap. This is the core tension of AI right now, speed versus control. If you slow everything down, you get safety and stagnation. If you move fast, you get breakthroughs and possibly chaos. Retail investors are stuck in the middle trying to figure out, is this the next AWS moment or the next Theranos? But then the unbelievable thing happened, because in the middle of all this chaos, Trump announces a new Fed chair, Kevin Warsh. Warsh is known as more hawkish on inflation and more skeptical of ultra-easy money than Jerome Powell. Translation into normal English: he's less likely to slash rates to zero and flood the system with cheap cash every time Wall Street gets a headache. For tech and AI, that's huge. The entire 2010 startup boom was built on low rates and free money. If that era is really over, then the companies that survive won't be the ones with the best vibes. They'll be the ones with real cash flow, real adoption, and real moats. As someone who got laid off in a strategic realignment, I learned that fancy words hide very real pain. Slightly higher for slightly longer rates might sound boring, but it decides which companies live and which ones quietly disappear. Here's where things get interesting. Because while the Fed is tightening the money spigot, Elon Musk is doing the opposite. He's trying to centralize power. SpaceX and XAI are merging into what could become the most powerful AI plus hardware platform on the planet. Think about what this combo actually is. You've got Starlink, global internet pipes. You've got rockets and satellites, the physical infrastructure. You've got XAI's models, the brains. And you've got X, Tesla, maybe even Neuralink in the orbit. the data fire hose, and the endpoints. That's not just another AI startup. That's an integrated, vertically stacked, AI-powered infrastructure company that could one day IPO at a number that makes today's SaaS charts look like rounding errors. But then he said this unbelievable thing because Musk isn't shy about his ambitions. He talks about building truth-seeking AI, making X the everything app, and turning Starlink into a cash machine that funds Mars. Whether you think he's a genius or a chaos merchant, the plan is clear. Concentrate compute, data, distribution, and capital in one ecosystem and move faster than any regulator can blink. For investors, this is a new template, the AI mega conglomerate. Instead of owning a bit of a model here and a SaaS app there, you get one giant, messy, vertically integrated beast. If it works, it could dominate. If it fails in a very loud, very expensive way. And here's where things take a step further, because this isn't happening in a vacuum. We've got gold spiking on geopolitical tensions. We've got layoffs ticking up at big employers while official inflation measures say, everything's fine, don't worry. You can feel the disconnect. Data says one thing, your rent says another. In my early 30s, I invested in something painfully boring while everyone else chased crypto rocket ships. It didn't 10x. It just worked. Slowly. That's the mindset I keep coming back to now. In noisy, chaotic environments, boring cash flow often beats exciting narratives. Here's where things get interesting. So what does all of this actually mean for you? The investor, the builder, or the person trying not to get blindsided by the next headline? First, don't overreact to the Epstein file, but don't ignore the lesson. The lesson isn't all tech is evil. It's elites protect each other and hide risk until they can't. So if you're investing, assume the glossy pitch deck leaves out the sharp edges. Ask, who benefits, who controls the cap table, and who's actually on the hook when things blow up? Second, on SaaS, I don't think it's dead. I think it's back to earth. If rates stay higher under Warsh, profits and retention suddenly matter more than net dollar retention to the moon, bro, on slide 17. Expect more consolidation, more price pressure from AI, and a few ugly blow-ups. But it's even getting worse. Third, on AI and Moltbook-style tools, expect two forces at once. One, a wave of developer productivity that quietly kills a lot of legacy vendors. Two, a big regulatory push once governments realize these tools can chain models together and act in the world. Watch for export controls, model registration, and new AI safety rules that conveniently help the biggest incumbents. Fourth, on the SpaceX XAI merger, this is one of the clearest power centralization moves in tech history. If you're bullish on Musk, you now have one main bet to watch. Whenever this thing IPOs, what multiple is the market willing to give a company that controls rockets, satellites, global internet, and frontier AI? That number will reprice the whole sector, up or down. Quick pause. If you're watching all this thinking, I'd love to cover stories like this, but I don't want to be on camera, this channel actually runs on the same system you can use. This video was created with Fludge.io, the same system that powers this entire channel. It researches, writes, and produces YouTube videos with an AI avatar, and you stay in control the whole way. If you want a channel like this without burning out, check out Fludge.io. Link is in the description. But then the unbelievable thing happened. Here's my simple checklist for the next 12 months. 1. Follow what the new Fed chair actually does, not just what he says. Watch the rate path. 2. In AI, favor companies that either own distribution, like massive user bases, or own infrastructure, chips, clouds, satellites, not just pretty front ends. 3. Assume more scandals. Whether it's more Epstein-adjacent files or something else, there will be new revelations. Don't trade the outrage. Trade the underlying shift in trust and regulation. And last, zoom out. Around 48, I stopped trying to sound impressive and started trying to be precise. So here's the precise version. This moment is not about one court case, one SaaS crash, or one merger. It's about who gets to own the rails of the AI economy. The money rails, the data rails, and the political rails. This is not financial advice. I'm some guy on the internet, not your advisor. Do your own research and never invest money you can't afford to lose. Now I want to hear from you. Are you betting on the SpaceX XAI empire, loading up on boring cash flow names, or sitting in cash and popcorn? Drop your take in the comments. If you learned something or just enjoy having the nonsense filtered out for you, hit like, smash subscribe, and turn on notifications. This is the comment section with Thomas Paul. See you in the next one.